The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, Money Masters and Treasure Hunters. Welcome to the January 29th, terrific Thursday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a fantastic start of your day. Let's make sure that both you and I, we do everything we can to get squeeze every ounce of energy that we can out of this Thursday. And of course, the easiest way to do that is to always remember that what's talked about is a dream. What's envisioned is exciting. What's planned becomes possible. What's scheduled, folks, that is reality. And I, reality-wise, want to thank you so much for scheduling your time with me this morning. I'm absolutely here to serve you, so feel free to reach out and give us a call at 877-927-6648. Of course, internationally, you can reach out to us as well at 727-445-1044. Remember, if you've got a question, somebody else, I guarantee you, somebody else got that exact same question, so go ahead and call in for them. A random act of kindness, that is the way to live life. Of course, this is terrific Thursday, none other than Tiger Financial News Network. Great to be with you. I'm Steve Rhodes. Welcome to the show. Right now, the Dow is up 44 points, trading out at 17,233. The S&P is flat. Composite is back 7 points. Russell 2000 is flat. DAX is up 13 points. FTSE down 28 out here. You've got gold back. Where's gold? $17 right now. Silver is down 64 cents. Light sweet crude up 24 cents. Decent move inside the euro. Decent move inside the euro. Japanese yen out here. But let's go take a look at the Dow up 43 points. Let's go see what's moving with inside of the Dow out here. So we take a look at the number of issues on my screen. It looks like about half and half. Half to the upside, half to the downside. To the upside is McDonald's, Boeing, Goldman Sachs, Home Depot, Procter & Gamble, Visa, JP Morgan, Nike. Leading the charge, the downside, Chevron, ExxonMobil, IBM, Caterpillar, United Health Group. So let's go take a look at, let's start off by see what's going on at the bottom out here, what's dragging the Dow lower. So you've, well, not lower, but what's a drag? What is a drag on the Dow? And that would be Chevron. So Chevron is got about, trading out of 102.22, trading inside this descending price channel out here, trading right now below its TAS market profile low. That's priced out at 102.69. Of course, this is a daily chart that we are looking at out here. Looks to me like a price ought to get down, and it's as long as it's trading inside its December 16th swing point, which has 12.7 million shares, and yesterday's move down into that was with 10 million shares. So Chevron's moving lower into the October 16th swing point. Nonetheless, that probably gets tested, but interesting, it is coming down with light volume. That is in the case of Chevron. If we go take a look at what's going on inside ExxonMobil, ExxonMobil trading out at about 86.67. Similar-ish style looking pattern from a standpoint is trading below its TAS market profile low. That was priced out at 86.88. You're at 86.68, so 20 cents below. Also trading into December 16th. That's got 26 million shares. Yesterday you moved down into it with 17 million shares. So this is kind of interesting. This is interesting from the standpoint of maybe being able to play a trade or a bounce inside of the XLE, the energy sector, because Chevron and ExxonMobil make up a good bit of the weighting inside there. What you'd like to see here in the case of ExxonMobil, since it's the number one weighting, you'd like to see this get down, get below 86.19, close back above it today, do it on less than 26 million shares, and that would be a failure on price and volume. That's what's going on inside of ExxonMobil. If we look at IBM out here, IBM, as we know, has been troublesome. IBM is also dealing with the December 16th swing point. So today is the test for IBM. Now that swing point from December 16th inside IBM is 6.7 million shares. Yesterday you came down with only 4.5 million shares. You've done 1 million shares so far today. Nonetheless, if IBM is able to close above the price point of 150.50, that's your number, your 150 115 as we speak right now. If it can close above 150.50, do it on less than 6.7 million shares, you would have a rejection of a key swing point with lighter volume. It's not there yet, but that is something to pay attention and to focus on. You've got Caterpillar. Just take a look at a couple of these that are moving to the downside. Then we'll switch over to see what it is that's trying to or is pulling the market up. So Caterpillar, that had a pretty bad day a couple of days ago, gapping down, big volume. Volume on that move down was 27 million shares. Let me see what kind of pattern is completing, if anything, out of it. Let's put this on a weekly chart. Might be a little bit easier for us to take a look at. So inside of Caterpillar trying to get all the way back to the October 2011 area. That had volume of 65 million shares. You've done 51 million shares through 10:15 on Thursday morning out here. So it has not hit the top of that swing, which, by the way, would be 77.79 out there. But you are coming into that area with some light volume. What it is trying to also test is the swing point from July of 2012. And that low was 78.25. That also had volume there of 45 million shares. So you're trading into that swing point with volume. Nonetheless, it has not tested nor broken the low, 78.25. That's what's going on inside of Caterpillar. Let's do one more. I haven't looked at Disney for a while, so let's go take a look at Disney. DIS is the ticker symbol. Of course, this is the weekly chart on our screen out here. As we take a look at this, not too bad. In fact, price trying to pull back into its old resistance level of its TAS market profile, which has held as support ever since it broke through that in December 2014. That number is 91.20. Now let's switch down and take a look at the daily chart. See what's going on the daily chart here for Disney. Disney right now trading back into the December 16th level. That's got 6.5 million shares, 1.4 million shares today. Yesterday, volume-wise inside Disney, 6.1. So 6.1 moving into 6.5. Just slightly lighter volume out there. What Disney needs to do today from a bullish standpoint is reject the high of $92 even, Steven. You're at 91.98 and do it with less than 6.5 million shares. You close inside or close underneath $92. That says, hey, you go test the low from December 16th. That's at $90.13. That's what's going on inside of Disney. Now let's go look at what's going on in the equities inside the Dow that are moving it higher. Let's start with McDonald's out here. I believe they are replacing, or their CEO is they're retiring. Who knows what the actual story is behind that move. If we take a look at what McDonald's was doing also into that December 16th swing point, that had 15 million shares, did not test the low, but it has rejected now that swing point. Yesterday moved down with 6.9 million. The day before, 6.6 million. And that was all going against 15 million shares. Moving into the swing point with lighter volume. It's why when we take a look at the ETF structures inside the diamonds, the SPYs, the IWM, the Qs, for the most part, they're all coming into the swing point with light volume, not enough volume to bust it through. All we've seen is a ton of volatility in the market, both to the upside and to the downside, which is normal for the month of January. At least it has been for basically 82 years out here. So what's going on is nothing more than normal out here. So in the case of McDonald's, let's see if it can bounce the heck out of here. Where's this thing headed to? In fact, McDonald's has been trading inside it's got some real significant resistance in the 97-ish dollar area. If we just simply draw a trend line, let's go do that inside of McDonald's. It needs to also break its downtrend out here. It's got a ways to go before it does that. But it'll run into that trend before it runs into the horizontal supply line and a gap down at the 97.55 area. I expect it to run into some resistance right around $95 and a change. That's the case of ticker symbol MCD, McDonald's. Let's take a look at Boeing out here. BA is the ticker symbol, up about $3 this morning. Strong like a bull. Running with the bulls out here is Boeing. Boeing right now trying to deal with its swing point from back in January of 2014, so a year ago. January 22nd, today's January 29th. The volume out there was 4.3 million, 4.4 million. Shoot, it's moving up with volume today, 2.4 million shares. So Boeing trying to take out a huge consolidation. If we take a look at the consolidation area inside of Boeing, the bottom of which is in about the 119 area. And right now, the top of which is, we'll call it 144. So we'll just say it's about a 25, 26-point move out there. If it can break out those highs from January 22nd, 2014 at 144.57. It's coming in there. It's coming in there with a hot landing. Maybe it's not going to land. Maybe it's just simply going to go ahead and take off. That is on Boeing. Goldman Sachs, let's go take a look at GS is the ticker symbol. Goldman Sachs trading slightly higher here this morning, but let's go see what this is trading into. Well, none other than December the 16th out here. That December 16th swing point has volume of 7.7 million shares. Coming back yesterday with half the volume, not even half the volume, 3 million shares. Last time that it was down here was 3.7 million shares inside of Goldman Sachs. Now, it has not tested the bottom of that swing point. It's still trading inside that swing point. So until it clears 176.29, this is Goldman Sachs, it says it wants to go test 171.26, the low of December 16th. What do we know? What we know is that it is trading down with light volume, Goldman Sachs. Let's take a look at Home Depot, HD. That's up 1 4/10% this morning, up $1.50. Nice looking stock chart out here. What is Home Depot doing? Home Depot trying to trade and clear resistance. Its resistance is from really the swing point or the day of January 8th. It's not the high out here, but that is your resistance area. In fact, it is really resistance because at that high of 106.99, nice little bearish engulfing candle on January 9th, and yesterday was a shooting star as price tried to get up into that level. That level having volume of about 6.4 million shares. Yesterday moved higher with about 5 million shares. Not enough volume to bust it out. Therefore, it didn't. So far today, 1 million shares in 47 minutes of trading. 1 million again going into about 6.4. Doesn't look like Home Depot is going to have the volume to take that out. Not bearish, just simply a move sideways here up in the case of Home Depot. Let's take let's take two more. Let's go take a look at Procter. In fact, let's do it just till I have to run into a commercial timeout. That way we don't have to I don't have to switch back and forth. So let's take a look at Procter & Gamble. That way we get a thorough look of what's going on inside of the Dow out here. So in the case of Procter & Gamble, big, huge gap down. That was on January 27th, 14 million shares behind the move. Yesterday, an additional 14 million shares. So there's trouble in River City. But if we take a look at where that trouble might find support, that's going to take us into, what kind of breakout did we have out here inside of Procter & Gamble? I'm looking at the trading day of October 24th, 13 million shares there. So not much really of a breakout. That's the level that it has found support, that little gap up. But if it continues to move lower, it's probably going to move down into the July 2014 level. This is PG, Procter & Gamble. That would be 77.29. But it first has to crack through the October 16th, 2014 swing point out there. Stock chart not looking too healthy. That's Procter & Gamble. Let's finish off by taking a look at Visa here. We'll do this one quickly with only 10 seconds to go. Visa right now trading below the December 16th swing. That had 3 million shares. Got below it with light volume, 2.8 million shares. So far today, about 500,000 shares. And that's in the case of ticker symbol V for victory or for Visa. Right now, we got the Dow's up 32, S&P down 2 points, composite off 11. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow just turned slightly. It's actually zero out here. Let me show you a chart that I'm following at the moment, watching to see some price pattern behavior out here, and it's the 120-minute chart for the S&P future. Let me get rid of this right there. There we go. So as we take a look at, if you're watching this on Tiger TV, the chart that I have on my screen out here, it's the 120-minute time frame chart for the S&P futures contract. Now, what we're noticing here, what I've noticed, a couple of different things. Number one, we've got a couple A to B equals CD patterns that have formed out here. Now, one of those, let's go ahead and take a look at that. Well, I'll show you both of them. I'll show you all of them. Here's the first A to B equals CD pattern off of the highs, and we can see that price made a 1-to-1 A to B equals CD pattern, got down to 2018, formed a nice little bullish engulfing candle right here. That was at about 2 p.m. in the afternoon. Went ahead and moved higher, made about a 0.618 retracement of this C to D leg out here. So that was the first one. What that did here was that actually set up the C point of an A to B equals CD to the downside. So here's the second pattern. Let me go ahead and I'll put that in here. So here is the second pattern that has formed or is in the process of forming right now. And that's where we're taking a look at the 1 to 1.618 A to B equals CD to the downside. That would take you to the 1978 level. 1993, which we're trading below right now, you're at 1989.75 is your 1 to 1.272 area. So there's your A to B equal CD down patterns. Now, what happened in what I'm watching right now is this candle session from 2 a.m. this morning. That was a hammer candle out there. And so that low is very important to both you and I. What this is signaling to us is even as of 2 a.m., even as of 6 a.m. this morning, that the bulls are trying to defend this area. This area being somewhere around the 1987-ish range out here. So we got a hammer candle. That low of 1987.75 is very important. What we can see is during that last 2-hour session that ended 26 minutes ago at 10 a.m., price pierced through there but still closed above it. So you've got support at that hammer candle. Any close below that on the 2-hour chart, not a piercing, but any close below 1987.75 says that level has failed. That level is going to then say, hey, your next stop is probably the price point of 1979 out there. How can it get to 1978.95? Hello. In any event, and that would also be a 1 to 2 A to B equals CD from the very top on the way down. So we've got a number of patterns here, potentially, this is a 2-hour chart, that are completing. We've got signals that suggest that price is trying to complete. Now, here's what I would ultimately like to see. This is why it's so interesting to me. If we take a look at the A to B equals CD patterns, we see those bullish reversal signals. As they also come down from the high out here from 8 o'clock in the morning, that was on January 23rd out here, you can see during this session here that took place just the prior 2 hours, the one that ended at 10 a.m., we got to the sixth wave of a seventh wave inning stretch candle. So this session that we're in right now does not end until 12 noon. I would love nothing more than to see the market just kind of trade sideways around here and not take out the actual low that took place at 10 a.m. Hey, look, if it does, it just recycles and I just have to wait a bit longer. But ideally, if I get my way, maybe if I scream and cry, maybe I'll get my way. No, I won't. I just have to sit here and watch the patterns. All I'm doing right now is just trying to anticipate. So what ideally would work out is that the market doesn't take out the lows. And then sometime between 12 and 2, so sometime in between, let's see, today is Thursday, so sometime in between Larry being on and Daryl Martin showing, David White coming on, sometime, anytime after that, we actually see some kind of piercing down. Piercing down with a close on that 2-hour chart coming into 4 o'clock with the close holding back above the 1987.75, because then we'd have an A to B equals CD. To the downside, we'd have these potentially bullish candles holding support, and we'd have a seventh inning stretch candle. And that would then say to us that there is a buyable bottom that would be in place, taking us into Friday out here. So that's the pattern that I'm looking at inside the 120-minute time. To me, that's the most interesting pattern that I see, and so therefore that's one that is on my screens, and I'm watching that. So just giving you the tools. Now, why is it that I'm even watching for that? Well, the reason I'm watching for that is because if we go take a look at the, well, number of reasons. Number one, I expect a bottom to form today. Number two, if we go take a look at the ETF structures out here, let's go take a look at what's been going on. We took a look at detailed data inside of the Dow, but if we take a look at the actual diamonds here, the Dow diamonds, December 16th swing point, 12.2 million shares. The move down lower 2 days ago was 11.5 million shares, so still slightly lighter volume. Yesterday's move down, Fed day, 9.6 million shares, lighter volume. Today, 2.4 million shares. Ultimately, maybe that big push, and this is where it'd be beautiful to all set up like this. That same push I was looking at inside the ES Mini, if we get a push in the diamonds down below 170.74, close back above it with less than 12.2 million shares, that would cement a bottom as well. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Right now, we've got the Dow is up 7, S&P back 4, composite back 12 points. Let's continue on taking a look at the ETF structures out here, so the SPYs. So really set up the trade for the S&P futures out there. That's the ES. If we take a look at the SPY, what the SPY is doing, it's also trading inside that December 16th swing point. Now, that swing's got 259 million shares. As we've mentioned before, came back in there January 6th with 209,000 shares, on the 14th with 192, then 176 on the 15th, 211 on January 16th. Yesterday's move, even the day, well, yesterday's move was 168 million shares. 168 going into 259, I don't think so. So now we're still trading inside that. That says that the low is something to be watching. Either rejection by getting back above the high of 202.40, or you got to watch to see what happens at the 197.86 type level out there. But what we do know is that the SPYs do not have the volume to bust out those lows, at least not yet, and at least not at 10:35 a.m. on January 29th. If we take a look at the the Qs, action inside of the QQQ ETF out here. It is trading, well, if we take a look at it, we try to maintain the same swing point. We don't necessarily need to because it's got its own swing point, its more recent swing point. But if we do come take a look at December 16th and use that as our benchmark, you got 65 million shares down there. 65 million was tested with 66 and then rejected back on January 6th out here. Yesterday's move down was with 43 million shares yesterday. 43, in essence, really going against 65? I don't think so. And that's what, so in the Qs, now what I'd prefer to see in the Qs to really cement the big bottom is huge volume. Huge volume. You know, I'd love to see 80 million shares. I'd love to see that swing point get tackled with the volume, similar to the volume that formed the low back in October of 2000, October 15th, 2014. You know, 100 million shares. Nothing forms a low in the Qs like big volume out there. But we're not seeing it. Right now, what we're seeing is basically a swing point that's being tested with light volume out there. That's inside the Qs. And we finish this up. We take a look at the IWM, the Russell 2000. The IWM right now trading into its, well, it hasn't even, did it? No, it hasn't. It's not even trading down into the December 16th swing point. And that's got 62 million shares out there at the high, which is 115.34. We're not even down there. But yesterday's pullback, yesterday's reversal, down with 38 million shares. So you're not inside the swing point, so we can't really do the, can't really do a correlation. No, what we do know is it's pulling back with light volume compared to that swing point of December the 16th out here. Now let's go to Scott in one of my favorite cities, Colorado Springs. Hey, Scott, how you doing this morning?
Good morning, Steve. How are you? I'm
Excellent.
good.
Thanks so much for asking. Appreciate it. How's the winter out there?
It hasn't been too bad. You know, we've had a day or two of some nasty weather, but lately it's been really nice and it's cooled down now, but not bad. In the upper 30s.
Good. Glad to hear that. Now, you wanted to take a look at IBM. Tell me how I can help you.
Well, I simply have some puts on it that I got into right before the island reversal a few days ago. At least I think it's an island reversal. And I just was wondering where you saw it going.
What's your time frame on the puts that you have? What's the expiration?
The expiration is February.
Okay, so let's take a look at what IBM is doing. Let's take a look at what IBM is doing right now. So IBM is testing the December 16th swing point, Scott, and that swing point's got 6.7 million shares. So far today, it's done 1.8 million shares, and yesterday did 4.5 million shares. So IBM, even as horrible as it is, so to speak, it's moving down into that December 16th swing point with light volume. I don't know how today will end. From your standpoint, what you want to use as a tool to take a look at today is, can IBM close below 150.50? It's trading at 150.20 right now. If it can close below 150.50, whether it's with volume or not, then you're taking a look at potentially lower prices. If it can trade below with more than 6.7 million shares, that would be good. That would be more bearish for the stock. But because it's testing that swing point, Scott, if it closes above 150.50, does it with lighter volume, it's basically the message that it's communicating to you is that it's not able to bust out the lows. And if it can't bust out the lows and it fails to do that, then it says, hey, it wants to go back and maybe try to bust out its highs out here. And what I would say would be the highs for you that you'd be looking at, and this is where you'll have to make some judgment decisions, would basically be the January 2nd type level, right around the 163 range. 163.09 happens to be the TAS market profile high as well. That's its resistance area. So that would be the range. What you'd really like to see, if these lows get rejected, what you'd like to see is this to not close above 155.90. Because if it closes above 155.90, it probably runs to 162, and that's the short-term outlook. So that's the short-term outlook on the daily. So I think today is when you really get a release of information. What I will also share with you, is that today should be the day that does form the low inside of the Dow. Should be today.
Right.
I don't know whether it's going to or not. I don't know whether it's going to or not. But for your IBM trade and your IBM puts, that's what I would be looking at. Today you should get some piece of information. Now, on a weekly basis out here, but take a look at what's going on the weekly time frame. The weekly swing point, which is that week of December 15th, has got 34 million shares. And on a weekly basis, you are really coming in light. So this is really light in the loafers because so far this week it's done 19 million shares. 19 million going against a benchmark of 34 million shares. There's no way. I can't say no way, but it doesn't seem like there's a way that IBM is going to get the volume to take out that weekly swing point. So you could also say, hey, tomorrow, if at the end of tomorrow IBM closes above 150.50, you will have had a rejection on a daily and a weekly out there. And so that might say maybe you've gotten all that you can out of the trade. And if you're still more long-term bearish on IBM, you would take the puts on a bounce.
Okay. Yeah.
Does that make sense?
Yeah.
Does that make sense? Well, at least
yeah, it's exactly what I thought you would say. So, but talking to you confirms it. So.
Okay.
Absolutely.
Yeah. So that 150 is really your key level. A close below it, and I don't care whether it's with light volume or not. Any close below it says that price can run even further to the downside.
Fantastic.
All righty, Scott.
Steve.
You bet. You bet. Thanks so much for calling. That was Scott in Colorado Springs. I'm glad that he called and asked about it because, IBM is a heavy weighting inside of the Dow out here. And when I was looking at the Dow charts, Dow stocks, some of the Dow stocks out there, we were only looking at daily charts. We're Thursday. We're only an hour into the trading session of Thursday. But, boy, in the case of IBM, boy, that is really light volume, considering it was the week of December, the week that began December 15th out there. Again, that was volume of 34 million shares. You're coming in way light out here. Let's go back and see, where are we at here? So that was the Dow stocks. Let's go take a look at. Let me switch back over to these stocks, and this with the Dow down 45 points right now. So this actually sets up pretty nicely at today's low. Now I got to just take a look and see what happened, how that 120-minute chart on the ES is trading. Okay, now it extends now, so it's gotten down below the low of the last hour, that 10 o'clock session out here. So that says that my time frame now has to shift. So it says, let's see. Well, I won't be able to report back to you, but it looks like it now shifts to maybe between the. Let's see if this is the low. This ends at noon. No new low at 2, but a new low at 4. That means it really doesn't take place until after the futures market opens back up later on this evening out here. But nonetheless, price still moving lower with less relative weakness even inside of the S&P futures, inside the ES on the 120-minute time frame chart out here. Now, let's take a look at gold. Gold's up $20 right now. 1265. Let's go check out the volume inside of Goldilocks out here. Let's put this on a little shorter term time frame. Let's put this on a 10-minute chart, see what kind of volume pattern, if anything, is inside of gold. Is this the active contract, March, or did this contract roll? This contract, I think, is in the process of rolling. But gold here on the 10-minute chart, you got a little spike down that took place this morning at 6:40 a.m. Gold is trading inside that. So that says that the price point at 1263.10, you're at 1266.10 right now. So another $3 is what we should expect gold to at least get down and test out there. Let me see here if what's going on the as this thing rolls. What is it? It's G is March and April is what, J, I believe, out here. Let me see what happens if we switch over to this 10-minute contract. So you got really the same thing going on inside of this 10-minute contract. So gold is also trading inside this. And again, it's just a 10-minute time frame that we're looking at, but pretty decent volume. There was a push of about 11,000 contracts on that session. You're trading inside it. So this says 1264.20 as we take a look at that contract. Ought to be tested, and that is what's going on inside of the gold contract. Now, on the little bit longer term time frame, if gold continues to move lower, our expectation ought to be that it should at least make the 0.382 retracement. Nothing wrong with that. That 0.382 retracement says about 1241. And even pulling back to the to 11.99 is not out of the question. That is your 0.618. But the first target's going to be that 12.41 area inside of gold. Silver is back 81 cents. So silver certainly showing its weakness out here, back 82 cents as we speak. Volume so far today behind the move looks like about 28,000 contracts, taking out a recent swing point low that had 35,000 contracts from January 27th. So silver already trading back inside the swing here from the trading day of December the 10th. So if we take a look at where silver is likely headed to at this stage, silver is probably, well, 1689 is going to be the first move. It's 0.382 retracement. You're trading at 1726 as we speak right now. We haven't looked at light sweet crude. Is there a lot of reasons to look at it? It's trading out at $44. Just under 40. We hit 43.99. So 43.99. Have we seen a new low? Yeah, I guess we have seen a new low, which was 43.84 thus far. So as we take a look at light sweet crude, and I go back to the continuous contract, we switch back over there. That's where we bring up what was that price level again. I can forget off the top. Well, it's back here. It's at the it's at the $33.20 out there. Now that would be the lows in January of 2009. How much were we paying for a gallon of gasoline back in 2009? I don't recall, but I'm looking forward to paying that price if, in fact, we can see light sweet crude get back to that price level. What else is moving out here in the market? Somebody said around 309. Now, we weren't paying 309 for gas back in March of 2009. No way. Let's see. You've got moving to the downside, Alibaba. That's the leader. 41 million shares inside of Alibaba. Vertex Pharmaceuticals, that's down about 8%, down $9 and change. Let's go check out Vertex Pharmaceuticals, see what it is doing. They were out with numbers, 144 million in revenues versus 351. What? They lost 210 million in revenue in one quarter. Wow, that's pretty. And they did. Wait a minute here. Oh, and their loss went to 176 million from 44 million of net income from the prior quarter. Man, what the heck is going on with Vertex Pharmaceuticals? I don't know what they do, but man, that's nasty. Now, Vertex Pharmaceuticals gapping down. And hey, by the way, Scott, if you are listening, I did not see the island reversal that you were looking for when we were looking at that IBM chart. That was something that you had mentioned, and I forgot to bring that back up. Not a big deal, but I just wanted you to know that I did not see that island reversal pattern. Now, back to Vertex Pharmaceuticals. VRTX is the ticker symbol. 1.8 million shares to the downside. This is trading into the swing from December 17th. That's got 2.5 million shares. So it's trading inside there. That low ought to be tested. That's at 108.70. If it breaks below that, what Vertex did was it had a nice breakout session that has held, in essence, as support. It was tested. That's from the trading day of September 19th, 2014. 6.2 million shares there. And that's at a price level of about $97.54. So if Vertex is able to crack below, stay below 108.70, that becomes the next target area for you, right around the 97.54. VRTX is the ticker symbol there. Let's look at some things moving to the upside out here. Let's look at Silicom. That's up 19% out here. SILC. So Silicom. I wonder if these guys are a sand company out here. I don't know if they are, but in any event, let's go take a look at what they do out here. It could be communication. Well, let's actually go find out. SILC. Let's go see what these guys actually do. That way, I won't have to keep you guessing. So let me see what their company profile is up here. Silicom manufactures market support. Nope. Networking and data infrastructure solutions for a range of servers out there. Okay, so that's what they do. Now let's come back out here. Let's take a look at what the stock is doing out here. Nice sign of strength today. Now, this thing is not the most liquid of stocks. As an example, 4 or 5 trading sessions ago, it traded 6,900 shares out there, 6,992 to be specific. So if you're going to get inside Silicom, you're not in. Ooh, we pull this back further out here. Nasty. This is Steve Rhodes with TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 46, S&P down 12, Composite off 27, Russell's down about almost 4 points, straight out 1171 out there. We were taking a look at a couple of equities moving to the upside, to the downside out here. Let's take a look at Apple. So Apple out with the earnings yesterday, got 26 million shares. It's up $1 right now. Apple, this is the daily chart? Yeah, this is the daily chart here for Apple. So what Apple's doing, let's take a look at it. It's dealing with a swing point. I think that swing point is November 25th. Let me make sure. 119.75. It is 119.75 is its swing point. So the bottom of the swing, the top has not been tested, but the bottom 117.45 was. Now, Apple yesterday, Apple moved up into that level with 146 million shares. That's 146 versus 68 million shares at that swing point. So with price moving up there, and even though the candle's red, it's a extremely bullish candle. Because you gotta figure out. It wasn't just that it was a gap up; it was a huge gap up. Because take a look at where Apple had closed on January 27th. You got to start here. If we took a look at this gap, because a lot of times people will think that is a bearish candle out here. Let me see if I were to try to really emulate what the candle might look like. It would look something like this. If I were to try to draw it in, and I'll try to see if I can change the color. So okay, so there's. I'm going to give you what the candle would look like if I were to draw it for you. Or I'd ask you the question here. Let me see if I can change this to green. I can. So let's see how that works. No, that's the outside. Okay, how do I do? Oh, there's the inside. So we'll change that to green too. Let me see if that works. Okay, and my transparency. I don't want it to be transparent. Let me see. How's that? Well, I guess you got to set it to 0 transparency, right? Okay, there's my solid candle. Now I'm going to add one more thing. So I'm going to add a little wick to it. So let's do that. Let me come add the wick. We'll just make it. We'll just make it like this. I'll just make it with an arrow, I suppose. So here, I just have to move it. So here's the actual candle, really from yesterday. If you were to really look at it. As to, I guess I can't move it over there. I guess I really, son of a gun. Well, I can't really put the wick in there so much, but the arrow right there, if you could kind of picture that in the center, I guess for some reason it won't let me actually move that. Let me see, maybe if I do it this way. Nah, it won't let me do that. But that in essence is the candle. So here's really the candle on Apple from yesterday. And this is this green bar that I just put in there. In fact, I'll turn that off for a moment. So if you're watching this on Tiger TV, and I hope that you are, let me see, where's the tool that I turn that off? I think it's there. There we go. So if I turn that off, and I turn that off. So here's the candle formation from yesterday. And many folks might take a look at that, and they might say, for some reason they might think that looks bearish. But the real candle formation, when you take a look at from the prior day out here, and this is a tool, this is a way to look at candlesticks in a way that I believe you should be looking at them. If we replaced yesterday's candle and we drew it like this, if our charting tools and system allowed us to do it, it would really look like that. And if that was the candle from yesterday, is there anybody here that would not say that is a hugely strong candle inside of Apple? And that's why when it comes to gaps, because look, we're so visual. You and I are visual. We learn by symbols. Symbols mean more to us than words do. And so in this case here, because we're so visual, when it comes to gaps, and gaps are your friend and a foe out there because they provide you with tons of information. That's why we use these to take a look at, areas of support and resistance out here. But when you have a gap, make sure that you kind of colorize the candle. Look, all you're doing, you're starting from the prior day's open, and the rest of the body goes to where the current day's closes at. And then the rest of the candle just simply becomes the wick out there. So anyways, folks, that's that candlestick charting at its best, but stay tuned because Basil Chapman, he's got his surfboard out, and because I guess the snow is melting. Is it melting up in Boston? I hope that it is for his sake. Hey, have a great Thursday, folks. Look forward to seeing you tomorrow morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.